Hi, and welcome to another episode of Energy Bites with ELS. My name is Elena Kinsey, and I'm the CEO and co founder of ELS Analysis. We are now recording our sixth episode of the podcast, and after a bit of a break from the pod from my side, I'm very happy to be back. As always, there are so many energy related things to discuss, but I'm still hanging on to last week's news and discussions surrounding European competitiveness. So I thought we could dig deeper into that during today's podcast. So, with me today to discuss this, I have ELS policy analyst Shana Casas. Hi.
Hello.
Siddharth Iyer, our market analyst. Hi, Sid.
Hi, Elin.
And our business strategy consultant, Carl Rosenberg. Hi.
Happy to be here.
So let's kick off this discussion by starting with Europe and the Commission's recent response to what has been perceived as a tougher global competitive environment. The fact that Europe has been lagging behind leading markets such as the US and China is nothing new, but the time to act and the sense of urgency has become more apparent after recent political developments on the global stage. I did touch upon this and the Commission's recent initiative named Competitive Compass in my weekly send out last week. But still, there is so much to talk about when it comes to this broad roadmap that is intended to bring economic growth and competitive edge to the Union. So, Shana, could you please just start by giving a background to the initiative and, well, what it entails?
Yeah, of course. Well, as you know, this is based on the Draghi report that was presented in October last year, which basically criticized how things are done in the EU and the high regulatory burden on companies, which is basically making the EU industry be less competitive than others, let's say in the US or China. And the Commission has now said that this is causing a lack of innovation at the EU level. So what this competitiveness compass says is that it's not only our economic growth that's at stake, but the future of our model. That means how we do things at the EU level. So, through this communication, through this competitiveness compass, the Commission wants to change the whole EU mindset, which I think it's incredible. How things are done here, it's what needs to be changed, our way of thinking and working with regulation. And I believe that's a huge change that I think it will not come as easy and will actually require a huge effort.
Mm. And on the political side, Carl, what do you think is the dynamic behind this? So, what is the sort of the ground for initiating this?
Yeah, I think the EU Commission's position is a bit bipolar. On the one hand, the EU Commission is essentially saying that we need to play to our strengths, and one of these strengths are legal certainty. And I made this point earlier that it reminds me of one of these jokes saying that that's been floating around as of late, that the US is innovating while the EU regulates. And here the EU is sort of doubling down, saying that, yes, we do regulate and we do this to drive investor certainty, while the rest of the world is providing uncertainty with regards to the green transition. And that is very much the Commission's perspective. But, however, I don't think the Parliament will be as eager to buy into this narrative this time around as it was during the last mandate period. Where we are seeing a shift to the right, as we saw during the last parliamentary election, and at the heart of the EU's competitiveness policy is the state aid, and that's because private risk capital may help to boost clean tech, but it does not support declining or under threat industries, and that's where the member states needs to step in according to the EU. So there lies the conflict between where the parliament is at the current state and where the commission wants the EU to be.
Mm.
Hmm.
Do you agree with that, Shana, or do you have another view on that?
No, 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 I totally agree with you. And I think you've brought up many interesting points. And I'm going to start with what you said about the EU building on its strength, because I actually think it's a contradiction in itself that the Commission is looking at reducing red tape, eliminating that regulatory burden that is affecting companies in making them less competitive. and it's actually doing so through almost 50 new policy tools, be that strategies, action plans, visions, acts, revision of existing directives. It is true that mostly 50% of those 50 new policy tools only for energy, but still, I think it is a contradiction in itself. But of course, if you want to do a full change, policy is the tool to do that. But at the same time, we're looking to deregulate through more regulation. So I think that that's actually going to be an issue also with the parliament, as you were saying, because the commission wants now this full change. But who's going to have to do that? The parliament. And then it's going to have to go back to the commission, who's going to have to implement it. So we need investment, yes, new regulations perhaps, but I think that the focus here should be implementation. And actually, for the first time, we have at the EU level a commissioner for implementation and simplification who's gonna have to make that happen. But I agree with you that there's gonna be a clash between the parliament and the commission, but also with the member states.
Carl, did you have a comment on that?
Yes, and I just feel the need to point out that this is one of the main departures from the Draghi report itself, who did not necessarily want more state aid. He wanted, as far as I understand, more central funding. And here lies a risk between a clash between the national industrial policies and the EU's single market rules. On one hand, the Commission wants a level playing field, but if it allows for state aid in certain sectors, wealthier countries and stronger lobbies will have an advantage. And in the end, you know, it risks causing more harm than good. And there's a strong political momentum for simplifying regulation, and here organizations need to be clear about which simplifications matter most to them.
And also, there's been a lot of criticism raised about simplifying this, and sort of the main motivation here is to decrease bureaucracy, which has been viewed as a problem for Europe's competitiveness, basically. But at the same time, many people are saying like, okay, but it's the bureaucracy and the standards and the structures that we have that actually the full Green Deal is based on. So are we leveling down on that? And I think here, that's why I said a sense of urgency, and why this has become such a big issue now is because we are seeing sort of the political landscape on a global scale changing, and Europe has to position itself. And I can't help to think like, are we leveling down just to stay competitive to the US now, if we are seeing US kind of withdrawing from these green ambitions? Or will we see sort of, kind of EU filling that gap and more competing on the sort of competitiveness within the green economy with China? And I would like to introduce you now, Sid, and get your view also on, can Europe even stay competitive being, independently pushing this forward, or do we have to depend on either the US to compete on sort of cost, basically, or are we seeing more EU kind of, having a higher tolerance for being dependent on China in the medium term until we can build up our own supply chains and manufacturing and so on to kind of get the green economy going?
Yeah, that's a very pertinent point, Elon. And for a very long time now, the EU has been, well, focusing on its local industry, but also being quite dependent on imports from outside the bloc. And this is extremely clear in the field of energy. It's very noteworthy that EU companies face competitive disadvantages when they face very high energy prices, which they do structurally because of lack of access to cheap fossil fuels, which are present in other parts of the world. The EU has been on a trajectory historically to try to build up more resilience locally, and that was more of a long-term goal, which was cut very short quickly by the energy crisis in the last 2 to 3 years. Now, the question then is whether the EU has the capability to build up its own local resilience, or whether it will continue to rely on external imports, either from the US or from China. or is there a middle ground where the EU can either continue to do both or have a completely different approach towards economic resilience? And in that sense, the red tape and the bureaucracy, of course, is a barrier to both trade within the EU as well as outside the EU. It's essentially extra costs for everyone involved, for investors, for commodity traders, for industries, and in that sense, harmonization of bureaucracy is one thing that would help tremendously. Shana, you had a thought on that? Yes.
No, but I didn't want to interrupt. I just wanted to make a point on harmonization, which is seen as something key in this competitiveness compass. And I think that's going to be very hard because we're talking about a full change of mindset from the EU, but the EU is not an empty entity. It's a union of different member states who at some point are going to have to give up a certain level of sovereignty for the sake of the EU and for the sake of that harmonization. And I just wanted to compare it very briefly to the Union database for biofuels, which was established a couple of years ago to do what you were saying, Sid, about reducing the red tape on industry and on companies that have to do their reporting obligations concerning biofuels. And well, that has not happened until today. In most of the countries now, companies have to report twice, first to the national database and then to the EU database. So I trust the aim of the Commission, but I am unsure on how this will actually happen in practice, whether that harmonization will indeed help companies and reduce red tape, or is it just going to be more and more added burdens?
Yeah, it's very noteworthy that, I mean, the goal is to have very similar rules, but then with the flexibility afforded to countries to often implement EU level rules in their own way, that leads to a proliferation of so many different regimes, which I think is greater than almost in any other sort of trading bloc. It is somewhat noteworthy that the EU continues to export large amounts of goods and services as well as import quite a heavy amount as well. But in recent years, there's been a trend towards trade more with, shall we say, allied jurisdictions which have trade agreements with the EU. So there seems to be more and more a shift towards almost legislative approach to trading. Not so much a freewheeling trade, which would, in a sense, be the lowest cost, but rather focusing more on safer alternatives.
But isn't that because we have so many different kind of agendas here? We want to decrease our dependence. We want to be leading the green economy or the green transition here, but at the same time, we want to, make sure that we have access to free markets and free trade and these kind. I mean, there are so many principles here that needs to be ticked, basically, in order to fulfill everyone's idea about the EU as a union. And I think here is where we are actually coming to the core of the problem, because you cannot get it all right. You will have to do some compromises, and I think this is where I think we are struggling a little bit in this discussion also to really find the reason behind this competitive compass. I think the problem is identified. Draghi did that very well in his report as well. But from identifying the problem to finding a way forward and not sort of leveling down on some core principle for the union will be extremely difficult. Are you kind of sharing my confusion here and sort of trying to navigate what this actually means?
Yeah, for sure.
In terms of achieving those core principles, I mean, I think it is very pertinent that there are some almost contradictory forces at play in terms of what to aim for in terms of economic growth or stability versus sustainability. That's the one side. But on the other hand, it's also about the resources that are available to work towards those. And in terms of funding, that's always quite central to the issue. We talk a lot in terms of state aid, essentially targeted strategic ways to like kind of direct funding. But a very notable thing in terms of the availability of other funding is the amount of money available to private investment, for example, through private saving. And it's noteworthy that the EU's level of private saving that goes towards companies in terms of stocks and bonds is very low compared to the UK, but especially the US. Largely, savings in the EU are in bank accounts, which is one way of playing things safe. But it means that there's less funding available out there, less liquidity for investment to go forward towards achieving an efficient outcome, which is not state directed.
So can I just sum up? I will let you in, Carl, but I'm just going to sum up a bit. So we are now here talking about the issue of lack of long-term stability in terms of direction, because as I think Shana also pointed out, sort of we have gone from a lot of time and many years now negotiating all these legal packages, and we were just about to implement them, and now this is coming from the side which we don't really know what it aims to do, really, if it's aiming to watering down or just strengthening EU within the sort of green transition, and that's where we're going to find our competitiveness. That's an issue, and that's a big issue for investment, certainly. And we know that long-term stability, and you can say whatever you want about the Chinese governance, but I mean, long-term stability is there. If they decide to do something, many years later it happens, just because they keep on to the direction that they once pointed out. And then we have this other issue, the cost, right? So how are we going to fund this? And this is where you kind of point your finger at the moment as well. And these are two main pillars in staying competitive. And we are now struggling to find a clear direction for any of them. So just wanted to put that out there, and I'll let you, Carl, come in now and comment on what Sid just said.
Yeah, it seems to be that the EU has two main tools for this coordination: regulation and the budget. While the Draghi report pushed for a major budget expansion, I mean, we were talking about 800 billion euros, if I remember correctly. The competitiveness compass suggests a modest increase, while at the same time it wants less regulation and more industrial policy beyond what the budget can realistically support. And by relying on state aid coordination instead of fighting for a real central investment through the EU, the Commission is essentially giving up on some of that harmonization that it used to have with the single market rules.
And what's that signaling, really? What's your conclusion from that?
Well, the conclusion is that the EU is giving up on its central drive. It's essentially assuming that national governments will have to drive the industrial policy and investment that are to be aligned with EU interests. But is that feasible? Will the national governments will they automatically align with EU interests? That's where I'm a bit hesitant. I think that German interests will go above EU interests, at least in the short term, and the same with French, and the same with Polish, and the same with Swedish. It will be very difficult to harmonize this into sort of an EU perspective unless they are significantly incentivized to do so.
So I completely agree with you on that, Carl. And I do think that we will not become, much wiser at this point and understanding all of this at the moment. We need to wait and see. And I know that there are more information coming out soon from the Commission, where we are going to get some more clarity. And we usually end this pod by just asking each and one of us what we will keep our eye on for the coming week. So Shana, I'll start with you. I'm guessing you will continue following this, and on what date is it that we will get some more information? It's end of February, right?
Yeah, exactly. Well, I'm very curious to see how this full change of mindset it's going to go, if it's going to happen, and if so, how it will happen. And as you were saying, on the 28th of February, I would say, yeah, at the end of this month, we're going to have more information on how this is going to happen. We have many proposals coming in on these first 3 months of the year, and before June we would have a revision of the state aid framework that it's going to give some answers on these harmonization issues that we were talking about.
Yeah, and I'll have to say also that, we have an amazing platform, ELS Analytics, where we provide a lot of information and analysis on these different topics. And Shona wrote a very good piece on that just last week on this. So, just don't hesitate to reach out if you want to get a free trial and see whether you would like to subscribe to this going forward. But now, Sid, please go ahead.
Yes. So for the coming week, I'll be looking at the US's position on fossil fuel exports and how it'll evolve, because the EU's future strategy would hinge quite a lot on that evolution.
Yeah, and Carl, please go ahead.
Yes, we spoke about the nuclear coordinator's report last week and his proposal about creating a state investment company. And the report proposal will now be further prepared in the governmental offices, but has not really been commented on by the government itself. And I feel like the industry has also not been able to make its voice heard on it. So that's definitely something that I'm going to be keeping my eye on. How will the government take this proposal further?
And the Swedish government, that to be said. Yeah. Thank you. Thank you, everyone, for this great discussion, even if it was a little bit confusing or not really full on conclusions from our side. But we are following this with huge interest because we think it will have a very big impact on sort of green investments going forward. So that is it from this time, and we'll see you next week again. Bye-bye.
Bye-bye.
Bye.